the Bitcoin ETFs are not for crypto people, they're for their parents. But
Yeah.
their parents have a trillion times more money than them. So I was actually looking at there's $157 trillion in wealth in the United States. The boomers and the silver generation have like 102 trillion of the 157.
Hmm.
So they have the vast majority of all the money. And so even if a tiny, tiny sliver of that is like, yeah, I heard my kids talking about it, or I don't want to kick myself in 10 years if this thing does go crazy, even if I don't understand it. That's a logical thought. And so I think that's what people underestimated was
Over the past few weeks, the world of finance has witnessed a remarkable surge in interest and investment within the cryptocurrency space, with significant weekly and daily gains being made by Bitcoin and other popular cryptocurrencies. Investors and enthusiasts are closely monitoring the dynamics of the market. A few short days ago, Bitcoin reached remarkable heights and began to approach its all-time highs from 2021. The biggest cryptocurrency reached $57,000 on Tuesday and briefly touched an astounding $63,000 on Wednesday. Eric Balchunas, a seasoned analyst and senior Bloomberg ETF specialist, stands out as a guiding light in the turbulent waves of digital assets among current crypto trend. The price of Bitcoin has been rising recently, but this isn't a temporary trend. Instead, large inflows and trading volumes, especially from major players in the market like BlackRock, are the cause. With over 300,000 Bitcoin in their holdings, Bitcoin ETFs have broken records for inflows and trading volumes twice this week alone. In a recent interview with Tony Edwards of Thinking Crypto, Eric Balchunas clarifies the developing story. Eric explores the significant pent-up demand for Bitcoin ETFs among high-net-worth people who oversee over hundreds of billions of dollars in financial money in his capacity as a senior analyst for Bloomberg ETFs. According to him, a sizable percentage of these investors are prepared to use these ETFs to invest at least 1% of their wealth in Bitcoin, which may result in hundreds of billions of dollars entering the cryptocurrency market. Eric Balchunas draws explaining comparisons between the emergence of Bitcoin ETFs and other launches, pointing to major achievements such as the GLD. Additionally, he considers the possibility of the Ethereum spot ETF being approved in 2024 and how it would affect the values of the biggest cryptocurrencies. Come along as Eric Balchunas explore the future of cryptocurrency investing, revealing the secrets behind the exploding demand for Bitcoin ETFs and the changing face of digital asset investing.
there's been big launches, and there's been really highly publicized launches. When gold launched, GLD, that was a big deal. And I'd say that was the only equivalent to this because they're like, for example, remember, Dave Portnoy launched that ETF Buzz and he had all the marketing. That thing, I think it traded 400 million on the first day, which is an insane amount for an indie small ETF. I mean, he really got to give him credit for getting that many people excited. But like Bitcoin ETFs did billions. They've already surpassed. If you just look at like the first month or the first 6 weeks, we're about week 7, I think. If you stack them up on any measurement, they blow everything away. At this point, you could probably find something in there like, oh, if we look at the first 2 weeks and we X out GBTC technically, and we adjust for inflation, technically GLD actually was tied. Like there are ways to maybe find a spot in the 7 weeks where it wasn't earth shattering. But if you go 1 week, 1 day, 4 weeks, 6 weeks, 7 weeks, you look at volume, assets, flows, post GBTC, extra, whatever you want to do, you're going to find they blow away every other new launch record. It's getting to the point now, and I just told you that I'm looking at the most ETFs traded.
Right.
This is out of 3,400. IBIT is 7th. This is right up there with SPY, QQQ, IWM. These things have been around for 25 years.
Right.
This thing's 7 weeks old. I've never seen an ETF go right up to the top 10 like that in this sort of a time. So, and I think GBTC is in the top 30 and Fidelity is 38. I mean, if you added them together, they'd probably be like the 4th biggest most traded. And if you're the 4th most traded ETF, it puts you around number 8 in terms of all equities. So if you combined all the trading in the Bitcoin ETFs, in fact, I'll do that right now, you're looking at something like, let's say we'll call it trading about as much as Apple.
Wow.
That's a lot, right? So this is volume, and I get it. Some coiners are like, you talk about the volume, but it doesn't necessarily mean the flows are the same. And I get that. Only a portion of volume converts into flows. But you have to understand that ETFs are trading vehicles,
Right.
and volume is so important long term. and it's important for bigger fish. If you're an institution, say you're a hedge fund or a prop desk, a trading outfit, or a pension plan, and you want a little crypto Bitcoin exposure, you love the fact that you can put on $100 million trade or a $50 million trade and no one will notice you. That's a big deal. If it doesn't trade a lot, I was like, I don't want to be half of the assets. I don't want to push the market price. I don't want a hedge fund to see a big fish coming in and try to game me. The more volume there is, the more anonymity these big fish can come in without anybody noticing them. They love that. And so they prioritize liquidity over everything else. So the volume is really good, even though it may get people hyped. Oh, it traded $1 billion. They think, oh, that's going to be $1 billion in assets. It doesn't quite work out like that. Yes. Some of it will be inflows, but the volume is like if you were fishing for professional institutional traders and they were actual fish in a lake, and you were tasking me what bait to use, I would tell you volume. More important than fees even. Advisors love fees and low fees, but these are already low. So I always tell people, if you want full maximum category growth, you need two things: low fees and high volume, and they got both.
For the second time this week, the 9 new Bitcoin ETFs created some excitement on an exciting Wednesday by smashing their all-time daily volume record. Reporting on X, Eric Balchunas disclosed that the ETFs surged to a remarkable $2.6 billion in volume, exceeding the record set on Monday. With 4 ETFs in the top 20, including BlackRock's IBIT in 4th place overall, Eric's updates throughout the day demonstrated the impressive performance. Eric pointed out in a follow-up article that the trading excitement was also affecting Bitcoin futures, ETFs, and other stocks, such as MicroStrategy. The volume record was broken by the 2x Bitcoin Strategy ETF, and other ETFs are preparing to accomplish similar things. With a combined trading volume of over $6.7 billion, the 9 Bitcoin ETFs outperformed Apple's $4.5 billion ETF among the top 100 most active ETFs. In his next post, Eric mentioned that the volume records that were achieved on Monday had doubled, along with some very strong trading numbers. With $3.3 billion, IBIT took the lead, followed by Fidelity, $1.4 billion. In addition to doubling their volume records, both ETFs logged a total of more than 500,000 individual trades. Eric was astounded by these astounding results, achieved just 7 weeks after introduction. As Eric explores the characteristics of Bitcoin ETFs and makes predictions on the possible approval of spot Ethereum ETFs in 2024, join us in examining his thoughts from his interview with Edwards.
People know themselves. They even though they love their 60/40 and their Vanguard, they also like sometimes see something happen and they don't want to miss out. And they think they feel with Bitcoin, I don't understand it, or I even think it's a scam. But I don't want to be like feeling like an asshole 20 years down the road when it's $1 million and I could have just put a little in my account. So I think like future FOMO cure is an underrated thing. And the other thing is the idea that there's way less pressure when you're talking about the hot sauce part of your portfolio for a boomer. They're not going all in. They'd put 1%. And like, okay, it flames out. This is not the money that counts. This isn't my beach house. This isn't my kids' money.
Right.
This is just a little flyer on something that just in case it goes up, So there's just a lot less pressure. And if something's volatile and speculative as Bitcoin is, the fact that it's only 1%, you can stomach that volatility much better than if it were the whole thing. So the strong hands theory is also part of why people underrated the growth or the asset potential, in my opinion. But I'll be honest, I even underrated it a little bit. Where we are now, I thought there'd be 10 to 15 billion in flows after the first year. So we're already at 6. So we're essentially halfway to where my middle point is. And it's only been 2 months. I think GLD's first year was like $1.5 billion. So you can see why 10 to 15 is pretty optimistic. But the 6 billion, I think, is pretty shocking in the first 2 months. Or it's not even been 2 months, 7 weeks.
Are you expecting an approval this year or possibly 2025?
James is really looking into this now. We have to have an answer because we're getting asked more. I see approval, whether it's the final deadline is in May, and it's BlackRock. BlackRock's big, and Grayscale also has one, and they want to convert, and we're in this deja vu situation. Like, will they sue if they're denied? Does the SEC know this? Will they just approve it not to get sued? A lot of unknowns, but at the end of the day, I'm just going to stick to the eye test. They approved Bitcoin futures, and when they wouldn't approve spot, they got sued, and a court said you have to approve them basically. So they approved spot. They already approved ETH futures. You do the math. So either they're going to approve them because they don't want to get sued, or they're going to get sued and then approve them. I don't really see any other scenario playing out. And you can't use the securities argument now because they've already approved ETH futures. That's out the window. Sure. So my guess is they approve them just to get the hell off the plate. And after that, there's really nothing down the road because Bitcoin and Ether have futures, which are regulated by CTFC. And that is an important part of the deja vu. Once you get to these other coins, like there's no real frame of reference for them. There's no futures market. So I'm way less optimistic after Ether. There's an election coming up too, which could mean a new SEC commissioner, which could mean a whole new sort of thing to think about. So those are all variables, but I'm fairly optimistic that CTFC approved Ether futures, which I guess is them saying it's a commodity.
Okay. I see what you're saying.
Which is part of what's been used against Gensler's comments the whole time. I believe James would be able to really fine tune this, but that's why the approval of ETH futures, not just ETH futures, but the ETH futures ETFs, ipso facto is like him saying it's a commodity, or it's him saying it doesn't matter that it's not a commodity. Either way, the genie's out of the bottle.
Eric Balchunas provided insightful commentary on investor psychology and the prospects for cryptocurrencies in the last portion of the video. He highlighted the psychological side of investing, recognizing that some people would be happy with their Vanguard investments and conventional 60-40 portfolios, but even naysayers are compelled to take a peek at this new asset class because of their fear of missing out, FOMO, on Bitcoin's potential development. Eric presented the notion of the future FOMO cure, highlighting that investors, especially those from older generations, can afford to dedicate a small percentage of their portfolio, say 1%, to the speculative and volatile character of Bitcoin. Pointing out that it's a modest risk for individuals putting their toes into the hot sauce side of their portfolio, he emphasized the approach's strength. After acknowledging that even he had underestimated the potential of Bitcoin ETFs, Eric turned the conversation to their expansion. The ETFs have already reached $6 billion in just 2 months, well above his initial projection of 10 to 15 billion in flows after the first year. Eric compared the performance of GLD in the first year to highlight the incredible traction that Bitcoin ETFs have garnered. Eric expressed his hopes when the topic of Ethereum's spot ETF came up, noting that the approval decision, which is anticipated by May have far-reaching effects. He evaluated the likelihood of approval while taking the regulatory environment and any legal issues into account. Eric was upbeat in spite of the doubts, stating that the CFTC's acceptance of Ethereum futures indicates well for the establishment of a spot ETF. Essentially, Eric's last words emphasized the shifting mindset of investors, the unexpected success of Bitcoin exchange-traded funds, and his hopeful assessment of the possible approval of an Ethereum spot ETF. Until next time, happy investing.